Hey everyone, Ahsan, Raza here from Century 21 Innovative Realty. Welcome to episode number 48 of the Ahsan Raza podcast. Today it's going to be myself solo, and I'm going to be giving you guys a quick boots on the ground market update and what we might see for the rest of the year as we wrap up 2024. So before we get into the main boots on the ground update, I want to give you guys a quick update on the number side of things. September, we actually had an increase in sales finally by 8.5% from last year. The average price, ironically, was down 1% or less than 1% a year over year. So I want to share my screen with you and show you guys a quick chart of the sales history from 2023 and 2024 and show you how this year might actually be the worst year in real estate in the last 20 years. So this is a chart that I make to track my numbers. And as you can see, these are all the sales number from each month this year. We still got October, November, December to go. But here is the total number of sales we've had so far this year, which is 51,944, which is very, very low in the real estate market. Surprisingly, last year we had sales of 53,655 sales. Now, it's very possible that this year we may not even hit 60,000 or 65,000 sales in total, which is a very, very low year, which means that 2023 and 2024 consecutively are going to be the worst years in real estate in over a decade almost, you can say. So that's a quick snapshot of the numbers side of things. Now, what I want to go back to is kind of give you guys a feel as to what I'm seeing, because I'm out there every day. I'm looking at sellers, I'm talking to buyers, and I'm getting a read onto sentiment and what's going on. I would say 6 months ago, the buyer sentiment was very, very low. People were on the fence. They didn't know what to do. They were waiting for rates to drop even further. Now, when I'm talking to people, and I know it's a small sample size, but it kind of reflects, I would say, almost everyone else in the market, because everyone sort of thinks the same way, as they read the headlines, as news comes out. But now when I speak to buyers, I can sense that they're more confident in getting into the market. They still may be on the fence, but they're about to hop off that fence very, very soon. And the reason for that is interest rates, right? The rates came down early in September by 25 basis points, and now they're calling for another rate cut in October and maybe even in December. So I think these activities are slowly going to ramp up activity a little bit. Now, if you know what I've been saying for the last 12 months almost, is that when the interest rates come down again and when buyer confidence comes back, I really don't anticipate a market where we're going to see prices skyrocket all of a sudden. I think there's going to be time for that. It may not happen next year or even the year after, but I think 2025 is going to be a year where buyers are going to come back on the market slowly. I think we're going to have a better sales number next year overall. I think affordability will be better because interest rates will be lower. But I also feel that the reason why the market isn't going to go full on, head on, and skyrocket like it did in years past is because a lot of people are still going to list their homes on the market, because, as buyers are thinking to jump off the fence now, sellers are also waiting at the same time, right? So sellers are looking at the interest rates as they come down. They feel that they may be able to get more value for their homes. What's going to happen is you're going to have buyers come in and you're going to have sellers list their homes as well at the same time. So it's going to be pretty steady, pretty balanced. But again, I mean, who knows what can happen? Our markets are very unpredictable. And as you guys know, the GTA market can switch on a dime and can switch overnight. This is just my opinion based on what I'm talking to with other people now in the market. So now that we've talked about the market, I want to talk about some headlines that are making news. And that has to do with some of the new mortgage rules that are about to come into Canada. And I'm not a mortgage broker, so I don't want to pretend that I am one, but I'm just sort of speaking at a high level. Actually, I had to speak to my mortgage broker before this podcast to make sure that I have my facts straight. So thank you, Mohammed, and thank you, Fatima. Quick shout out to those guys. So basically, in the past in Canada, the rule was that if you were getting a mortgage that was insured, which meant that if you're putting down less than 20%, you would essentially be only allowed to get a 25-year amortization on the mortgage. And so because of that, a lot of people may have been struggling because they're mortgage payments were going to be a little bit higher, but at the same token, it did allow them to get into the market with just 5% or 10% down, which itself was a huge advantage. What happened was they made an announcement recently where they said first-time homebuyers can now get a 30-year amortization on insured mortgages on new builds, on new properties, which was okay. That was a step in the right direction, something to go along with, and it kind of helped a little bit. Now, recently, they've come out with another rule, which is sort of even better than that, is that a first-time home buyer can now get a 30-year amortization on all types of properties. It can be a new build, it could be a resale property. So, in my opinion, I think that's a good step in the right direction. Is it going to really move the needle for first-time home buyers? Not much, but if there's a few buyers out there that can benefit from it, then why not? It'll help them in their mortgage payment and allow them to still put down 5% or less than 20% overall to get into the market. So just a quick piece of advice here. If you are going to take advantage of this rule, I always mention and I always recommend to my clients and my friends and family is that only do so if you can actually afford those mortgage payments, if you can actually get through those payments and be comfortable. If you're going to live paycheck to paycheck and have stress and not be able to sleep at night, then maybe it's better to save some more money or talk to your parents for some equity, some money, things like that. So just be careful with how you take advantage of these rules where they may seem really good and advantageous. You also want to make sure that they work for you. Even if you are approved for them, you want to make sure you're able to afford them at the same time on a monthly basis. The next rule, which is also very interesting, is that previously you had to put down 20% for a house if it was $1 million or more. Now the government has increased that cap to 1.5 million. So if you're putting down less than 20%, or if you're getting an insured mortgage, then not only do you get the 30-year amortization, but you can also buy a house up to 1.5 and still get it insured. So that is a rule that I think will probably help the buyers or help activity. Is it a good rule? I mean, only time will tell. The only problem I have with that rule is that I feel that it's such a high margin. You're talking about $1.5 million and you're putting 5% or 10% down, and that's a lot of debt. So that means you essentially have to be making a lot of money to be able to even qualify for this rule and this advantage. So again, even if you do qualify for this, make sure that you're actually able to afford it on a monthly level and not be living paycheck to paycheck. So that's it for now. That's a wrap. I want to wish you guys a great long weekend. This is a bit of a short video, but just want to get the video update for you guys and make sure you guys are updated on the market. And if you have any questions, reach out to me anytime. Always happy to serve you. And if you have anybody who's looking to buy or sell in 2025 or simply just needs advice and a quick phone call, always happy to provide value, provide education. And please do share this podcast with your friends and family and do subscribe to the channel. Thank you very much and see you in the next episode.